Hello, and welcome to our market alert video for today, which is March 24, 2023. And we've had a lot of excitement this week. And interestingly, the market really didn't move much. A lot of ups and downs, but essentially not much change. So what do we take from all of that? Well, first of all, we sent you a video earlier this week that hopefully you watched, where we described that Federal Reserve Chairman Jerome Powell said that they're going to raise interest rates a fourth of a percent. And they also penciled in potentially only one more rate increase this year. So that kind of should have made people calm down about this idea that they're going to raise interest rates to the sky and destroy everything in sight. So that was good news. He also said that the banking system is safe. Translation, we'll print as much money as it takes to support the banking system. So I guess that's good news. But the market was reacted positively to that. But of course, Janet Yellen was testifying at the same time, and she came out and said that they are not going to provide additional insurance for the smaller banks. Well, that scared everybody, because why? Well, right now there's a concern that there's going to be a flight to quality, meaning that people who have money in banks, smaller banks that are not systemically important, that are, we can't let them fail banks, that they might take their money out of those banks and go and put it in the bigger banks, which, are the ones that are too big to fail. Well, if that happens, many of these regional banks could go out of business if they have a run on their deposits. So that kind of scared people, because runs on banks are not a good thing. Now, of course, since then, Janet Yellen has come out and said that what I should have said was that we are not going to do that because the banking system is safe and we don't see the need to do that. Therefore, we're not going to do it. But if we need to, we will. Now, it would have been nice if she'd have said that in the first place. But anyway, so here we are. And so we can still consider the whole banking crisis to be a tempest in a teapot. We don't think that the central banks around the world are going to let the banking system collapse. They've seen that movie in 2008. They're not going to do it again, right? So we have to be careful to not to overreact to that. Now, having said that, it is possible that the historically rapid rise in interest rates that the Fed has done up until now does cause some destruction somewhere, does cause a very bad recession. And if that were to be the case, then we could see the market go down dramatically from here. Now, our view is that jobs are still strong, the consumer is still spending, so the likelihood that we're going to see a very bad recession at this point doesn't seem as likely as one that is relatively shallow, but we'll see. The important thing for us, though, as retirement planners, because we work with people who are over 50, who are retired or retiring soon, is that we need to plan for the worst and hope for the best, not the other way around. Okay, so we have our invest and protect strategy. Our forecast is that we should have a good year this year, but we could be wrong. And if we're wrong, we need to have a mechanism, a plan to protect our clients in that event. And that's our invest and protect strategy. It's the one that told us to get out in November of 2007 before the 2008 market crash, told us to stay out for a year and a half during that period. It also is the one that said to sell in April of last year. By the way, we are still out of bonds. We consider them to still not be ready to be invested in and ready for prime time. So if you're on the throes of, you're concerned, maybe even scared about what's going on, you lost a lot of money last year and you're still being told you should buy, hold, and don't worry about it, don't ever get out, and maybe you're starting to think that maybe that's not the best advice, visit with one of our retirement planners and get a second opinion. We don't think that buy and hold is the way if you're within 5 years of retirement or in the first 5 years of your retirement. If you're in that decade, we think it's the single most important decade of your entire financial life. And making sure that you have a strategy to protect against major losses, we think is very important. So if you agree with that, if it makes sense to you, visit with one of our retirement planners. There's a link with this video where you can schedule a time to visit, and we'll do it no charge or obligation, and we'll part friends regardless of what happens. So again, we still think there's a positive outlook, but there are certainly some risks out there for a bad recession, and having a protection mechanism may be what you should be considering. So thanks for watching this video. Share it with as many of your friends as you possibly can. We want to help as many people have financial peace of mind, enjoy their retirement, which we call your second childhood without parental supervision. So again, we'll talk soon.